All right. So we're here with Ryan Page. He's a fractional CFO. And first of all, Ryan, can you please introduce yourself, what you do, how you got to do what you're doing now?
Yeah, of course. Great to be here with you. And as you said, my name's Ryan Page. I'm the owner of Backpocket CPA, and we are an accounting agency that helps home service entrepreneurs organize their finances so they can stop living in chaos and start leading with confidence. And so, how we got here. So, I actually grew up in Southern California, moved to Arizona and went to school there at Arizona State. Go Sun Devils. Uh, and then, yeah, I got into accounting, majored in accounting, started working at Big Four firm, PwC, and worked there for a handful of years in like process auditing. And then I got into data analytics. So um, while I was there, I became a CPA. I had I guess, a little bit of background in process, developing process, background in data, but nothing really in accounting other than school. And so my thought when I was in that position was I should go do some accounting somewhere and get good at that craft too. So then I went to a Fortune 500 company and did financial reporting there. So I worked on an accounting team and basically was in charge of filing financial statements with the SEC. And so that's where I started to cut my teeth on accounting. And what I learned there is I like working with small business. I just felt like I was doing high level accounting work, but I was providing no end value to anyone. And so I just started to feel like the work it was like meaningful, but also meaningless because there was no end user. And so that's when I wanted to focus more on working with small businesses. And then, yeah, we moved from Arizona to Tennessee, and that's when I started Backpocket CPA.
So how long have you started on your own? How long ago?
It's been 4 years. So we started in July of 21.
Okay. So now Backpocket CPA. Now you do a lot of CFO functions, right?
We do, yeah.
Okay. So can you tell for our viewers what
Yeah.
the role of a CFO is in simple terms? And
Of-
kind of the viewpoint of our target public, which is small business owners
Yeah.
who don't have necessarily a great deal of financial or business training background, but they have a business.
Of course. Yeah, so I think it's worth saying there's different levels of CFO. So obviously, if you're a large company, you're looking for more of a full suite. And then obviously, as a small company, if you're a startup, you're going to look for a startup type CFO. Um, there's different people that are focused on, helping raise money. And so it's really important to know like what aspect of what you're trying to get out of working with a CFO. So that said, where we focus is primarily three things where we've one found the most interest for myself and my team, and then two where we've found interest among the people that we work with. So one is really being an accountability partner. So it's helping business owners break down their goals of themselves and then the business, and then basically helping them accomplish them. So it's one element that's always overlooked, and an area where we hear a lot of people say they wish they had more. Another is basically they want a roadmap. So we help them break down their business into the building blocks, basically the lowest level, and then we rebuild it back up, so that we can have and develop a roadmap. And then third
Can
is,
you can you give me an example of that? The kind of a very simple
yeah.
example
Um,
of that doing that.
Yeah. So, for example, worked with a an electrician or a solar installation company, and um, we're trying to forecast revenue. So we break it down to, do we break it down? This is the conversations we're having. Do we break it down to average job size and say, okay, average job size times X number of clients, that's going to get us to our revenue target? Or do we break it down to 48 cents per kilowatt hour times however many kilowatt hours? So So we're basically like trying to determine like how do we want to rebuild it, and then what's the strategy here.
Okay.
Um, and then the third element where we help uh, small business owners is along the lines of basically helping them look at the future. So they basically want someone looking out for them. I think it's a big thing you hear of people who have CPAs, like I want my CPA to look out for me. They should be telling me what's coming. Um, and frankly, it's not that's not the way the CPA model is designed traditionally. And so there's a gap there in people looking out for clients, and that's where we try to fill. And I think that's coupled with the prior step, building the forecast. Here's our cash runway. Here's what we're expecting. What do we need to do if we're seeing cash shortfalls? That type of thing. I do want to add a caveat here. My company name is Backpocket CPA. We don't file taxes because, like I said, one, I don't enjoy them, but two, like I said, I don't enjoy filing them. The the uh, the model there is basically a volume play, and we're not in the volume play. I want to work with less people and actually know my owners and be able to help drive value. Whereas the traditional CPA model is feels to be not that for me.
Okay. So would you say then that the difference from a CPA to a CFO, the
Mhm.
CPA is more along the lines of
This
tax
is always
accounting?
Yeah, this is always funny because so CPA stands for Certified Public Accountant, and
Right.
most people think CPA means they file taxes, but CPA kind of just means you work in the public, offer services to the public. Uh, so I think traditionally among society, yes, CPA equals tax, but CPA doesn't also like there's CPAs only can do audit if they want,
Okay.
or yeah.
But then the CPA deals with the financial side of things, whereas a CFO ties in also management and goals and so forth, because a CPA traditionally does not necessarily look at forecasts, how we're going to achieve this, how much money can, I mean, they can say, tell you where to save money and how to maximize things for taxes for sure.
Yeah.
But there is a distinction, right? And then that's question one. And then two, are all CFOs CPAs?
Um, yes, I agree with you. There is a distinction there, and two, all CFOs are not CPAs.
Okay.
I think the CPA designation is, I guess, to what we were just saying, is more thought of as like tax focus. So that's why we're back pocket CPAs because we have the ability to think of tax, but we don't file taxes and we sit in your back pocket. So we have more of that reporting background and structure. So like basically creating good reports for people to use.
Okay. So you're kind of a um, an outsourced member of the team that looks at the how to maximize finance.
Exactly.
Okay.
Exactly. Yep. So I guess it's called fractional CFO. So basically
And
part-time
that's the next
CFO.
question, which is what is a fractional CFO and what is the advantage for a small business of a fractional CFO, which is really what you do, right?
Yeah. So one of the immediate advantages is it's fractional. So think of that as part-time. So if you
Mhm.
hire a full-time CFO, you're paying maybe a couple 100,000 for a CFO to work with you full-time. At the fractional CFO level, I mean, it starts at 30,000 and kind of works its way up. So you're getting that high-level expertise for a fraction of the cost. So that's I guess the glaring advantage of fractional CFOs. That absent that, like what we actually do, kind of relates back to what I mentioned that we do. So basically, accountability partner, someone to talk strategy with. What are we going to do to hit our goals? They're kind of the financial quarterback. So, like for example, one of my projects is the books are a mess. Like, how do we get this cleaned up? And so, um, basically saying like, okay, we need to go talk to this agency, now this one, and kind of like just knowing what to do where is another advantage. And ultimately, when they don't know what to do financially, it's just someone who can provide insight and just objectively look at the numbers and say like, this is the path.
Good. Or these are the options, I guess, if there is more than one, right? Yeah.
Exactly. And then
Um,
ultimately, it's someone outside of you invested in your financial success. Like a lot of entrepreneurship is kind of lonely and you're sitting on your own goals, but finding a partner who's interested in your financial success as well and helping drive that, I think is another benefit there as a fractional CFO.
that's great. So when we look at the small business, obviously, let's say somebody used to work for a big plumbing repair company and they became very good and they decide to start their own business and they're just themselves and
Hmm.
and they do their own plumbing. Normally at that level, you would not have a financial professional on board because you're too small. So when we look at business growth,
Hmm.
and obviously when a business is really, really big, 20, 30, 40, they know that they have to have a CFO in their
Yeah.
corner somehow. So at which we're looking at the growth of a business, at which point it makes sense for a business owner to start looking at, should I get a CFO? Should I look into getting a fractional CFO?
Yeah. So my initial thought here is when an owner is ready to stop making gut decisions and start making strategic decisions, that is like the barometer that's not a financial measure of when to make that decision. It's ultimately like I'm sick of looking at my cash in my bank account and I know I'm making money and the cash is not going up. So, like, what do we need to do here? We either need to manage our costs, make more, or have some specific strategy in place to help fix that situation. So that's like the um, qualitative aspects. If we're talking like the scenario you gave, someone's just starting their business, like it probably doesn't make sense. It definitely doesn't make sense for someone to bring on a CFO at that point, but they could definitely bring on a good bookkeeper or someone who does like what you're talking about, managerial reporting, who like can help you keep your finances organized and make strategic decisions. Um, I think if you can start with someone like that, it would be, I think, a game changer. And then you can get to a point where you're like, okay, we're ready to start looking forward. Uh, and that's when it would make sense to have a fractional CFO. If you want a dollar value point from my perspective, I think it's typical for accounting costs to be about 3% of income. And so that's kind of like where I guess you measure it out. So you figure $1 million in revenue, 3% of income, let's say $30,000. That's going to be 2,500 bucks a month. So like that at $1 million is typically where I feel like I've seen owners start to want that additional help. We've had clients that are smaller where they know that they have the recurring business coming in. Their financials are just kind of all over the place, and they typically at that point couple it with our bookkeeping as well. But ultimately, I think $1 million is kind of like right around where it starts to make sense from the financial 3% of revenue kind of target.
Great. So looking at financial management, CFO, tax account, no, not tax account, management accounting, reporting, and so forth, so that an owner can make good decision for the growth of the business. And looking at the fact that an investment into a fractional CFO should be giving you a return. Can you give a case history where the investment of an owner in your services resulted in them actually making more money than what it cost them to hire you?
Yeah. Um, I think though, instead of just the monetary ROI, a lot of the ROI on us or on a quality accounting or fractional CFO team is like emotional. Like to be honest, a lot of people come to us, their books are a mess. They don't know what's going on. They don't even know what their bottom line is to know what an ROI is on their investment. So I think it starts with that. It's cleaning up the good books. This is where pretty much any case study I'll give you, and I'll give you specifics in a sec, but they all start with cleaning up the books, designing a reporting structure, which is called the chart of accounts, that makes sense for the business. And so one little caveat here, or one little element that I always see is um, in the expense section, like if you just downloaded QuickBooks, there's 20 different accounts. There's advertising, there's office, utilities, rent, like all a lot of stupid little things that are like, okay, I spent $64 on Staples. Like I don't, it doesn't matter to me and to when you get to the like trying to make decisions. Seeing all that stuff just muddies up the water. So what I always do is condense it. So we make main drivers of the business. That's the way I'm always thinking of it. What are the main drivers here? That's going to be your labor and benefits. Labor is always a driver. Advertising and marketing, general and admin, travel and entertainment. Um, so think of those basically as like the main parent accounts on your P&L. So everything condenses to there, and then you create sub accounts under all of that to give it a solid structure. So
Right.
then we can collapse and say, okay, labor is 40% of revenue. What's the industry doing? What's normal? Um, G&A is okay, 15%. Like that's really high. So let's
DNA.
lower it. General and admin.
Okay.
Yeah, so that kind of gives us just baseline of like what element of our business is in whack or out of whack. And then that gives us the trend too going forward. And so that's kind of where all of our projects start is creating that reporting structure. And then we bolt on tool to build out a forecast going forward. And basically it's like I said, we now have our reporting structure. We're breaking it down to the lowest level and rebuilding all of whatever into the future. Um, and so getting into a specific client, basically all of that. So think of just the mental uh weight lifted, knowing
That's right.
everything is
I was going to
clean.
say liberation.
Yeah, that's a great way to say it. Um, and then basically, so this client was one entity, or basically one company with two different sets of books under it. So one was electrician and one was solar. And as you can imagine, I'm sure you see this a lot, money's flowing back and forth between all of them. Which one's propping up which? Uh, no clear chart of accounts across either of them. Never looked at consolidated reports. So we clean it all up, create standard chart of accounts, consolidate the reports, ultimately get to standard profit margins, and then we're able to, get the business sailing going forward. Um, so
Yeah,
no,
I think part of what happens is I don't think an owner realizes how much burden is on their mind when that mess is going on. And so they cannot really, because they cannot really see what things are, they could be bad, but they don't have a clear picture,
yeah,
right? And because we obviously we are not CFOs, but we do the um, management accounting part of it. So, but when we have that and they have that clear picture, and they suddenly realize they don't have to try to do it themselves, because a lot of these business owners try to do the bookkeeping themselves.
yeah.
It's
Oh
like
man,
I'm trying to fix my toilet. No, I'm gonna call a plumber. I know I cannot do it,
yeah.
and it's just it's just
Unless you ask ChatGPT, then you can.
well, yeah, still, you can
But I
talk
get
about
what you're saying.
accounting. That it's
It's
like,
true.
yeah, you are a professional in what you do, and you do what that, and let
Yeah,
the professional do. So then there is this, oh, this is a quantity I can count on. I don't have to worry about it. I get the information I need.
exactly.
It's worth it. It's worth it because, yeah, maybe I pay $500 a week or $1,000 a week, but I don't have to worry about that. I always have
Exactly.
my information. I mean, how many times have you had a new client whose financial management was looking at the bank balance in the morning and trying to remember if there is a check that needs to clear? I mean,
100%.
right? I mean,
That
that's
that's
you cannot grow a business with that.
yeah.
So
It
the ROI is in that.
exactly. It's in the peace of mind, and then if I can just maybe throw out like one tidbit or one like little tip or way to start thinking about trying to start thinking about your financials. Um, is in terms of margins. So I'm always thinking in terms of percentage of income, but then if you think of margins, so basically if you have your revenue, however much you earn, minus your cost of goods. Cost of goods are what it takes to service the revenue.
That's right.
So then you should always have that margin in your head, the gross profit margin. So let's say 60% is what this business generates. If if we're dipping significantly below that or something is happening, that's dramatically affecting the rest of the business. So we always should have gross margins in mind and then ultimately net margins. So after you get to gross, you have all that other stuff, the G&A, the labor and the general and admin, the labor and benefits, yada yada all the way down, um, getting you to that net margin. And so say that's 20%. So that means basically you can think 40% of every dollar is going to service the business, 20% is going to go to you. And so if we're going to be in a phase of expansion, then maybe it makes sense for us to get out of 20% coming to us. But so the ultimate tip there is just dial in your margins and think of your margins.
And know them, because that's the point. If you don't have your records up to date, that's
Yeah.
why that cleanup when you start is so important. You do not know where you're at. The other thing is margins really especially in any delivery business, could be
Yeah.
construction. They can really change depending on the pricing structure. Obviously, if you only hire subs,
Hmm.
it's pretty fixed, you know. But
Yeah.
now when you have people on the payroll and you have to pay them for the hours, and you think, oh, it's going to take 20 hours to either do that job. You can be in the service business like me, would be, doing accounting or bookkeeping. And
Yeah.
you can charge by the hours, but sometimes clients don't like that. They just want to know a known quantity. And if
Yeah.
people take a long time, the margin just collapses.
Exactly.
And then you don't have enough money to cover everything else.
Exactly.
So
Eh,
I've been recently come to the conclusion that that's such a key thing for people to know at any given time.
Yeah. I mean, it's the first thing that I think of when I get a new client as well. It's just like, okay, they're coming in at this, like, here's my gross margin, here's my net margin, and this is how it's going to affect the business. Like, it's just really one of those first thoughts that I think should be in mind.
Yes. Okay, great. Now, the next and last question is, if anybody would like to reach you and get more information, what would be the best way to reach you?
Best way is through our website, backpocketcpas.com. Yeah, you can find me on there. I'm on LinkedIn, but definitely website is preferred.
Very good. Great. So
Yep,
thank you so much. And until next time.
yep, of course. Great talking with you. Good conversation.